MGX Minerals is revolutionizing the new energy economy with patented lithium extraction technology, replacing traditional solar evaporation using low-cost, low-energy nanofiltration. The first system of this paradigm shift technology is currently being commissioned. MGX Minerals trades on the CSE, symbol XMG, the OTCQB, symbol MGXMF, and Frankfurt, symbol 1MG. For more information, visit our website, mgxminerals.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Ted Dixon, CEO and co-founder of IncResearch.ca, Canada's first online financial news and research service providing insider news and knowledge to investors. Welcome back to the show, Ted.
Well, it's great to be back, Jim.
Is the story going to be gold?
Well, a lot has happened since our last interview 2 weeks ago, and at the time we were wondering, what it would take to trip up the markets and move up in interest rates. Now, in that interview, I thought, well, I didn't think a 2 3/4 10-year yield would trip up the markets, and in one sense, I was right. It didn't take it. It didn't take 10 3/4. It only took 10. It only took 10.85. 10 basis points to move up in rates on the long end from there. To really start to play havoc with volatility in the market. Now, we talked about last week that maybe it would take up to a 1% move in rates to really trip things up, but apparently not. So, Mr. Market is rolling over here, at least in terms of his or her behavior. And the big question is now, where does gold fit into all of this? Because as we saw a big jump in volatility, we've also saw some volatility in gold, and now the question is, who's going to triumph here as we work through this new environment? Is it going to be the gold bulls or the gold bears? And and we've in our reports to our users over the last month. In January, we made the bull case, and we also addressed it in February in our gold top 20 stock report. In February, we talked a little bit about the bear case for gold, and I think right now we're seeing that tug of war between the two play out.
Now, when it comes to gold, I just saw a report that the world's biggest gold company, Barrick Gold, says their production will fall this year. Is that an indication that gold supply is going to become tighter?
Well, I think that gold supply is not going to be the big issue here, and you're going to have the large companies are always challenged, it seems, in building their accessible reserves. What really is going to really decide the fate of this market is investor and mom and pop demand for gold and gold stocks. So I really don't think that the supply side of the equation is going to be the marginal factor. I mean, I could be wrong. I've been wrong about a lot of things, Jim, especially year to date. Been a lot of tricks the market's played on a lot of people, including myself, and we'll see. But I think that at the end of the day, it's going to be sentiment that drives the gold market, and the sentiment right now, I think it really is a big question mark, and I think a tug of war between different views on the role of gold here and how it's going to behave is what's at stake. On the one hand, you've got the backdrop of guns and butter, and this month's top 20 gold stock report, which is available on CanadianInsider.com, or it can be purchased, or if you're a Canadian Insider Club member, it's included in that. We've titled it "Guns and Butter or Bust," and why we chose that is because in January we wrote about basically guns and butter. How you have Trump priming the U.S. economy with tax cuts and spending, and primarily tax cuts in January. But then, lo and behold, in February he came out with a bunch of spending. So we've got the guns and butter part now. What is guns and butter? Well, back in the 60s when the U.S. was in Vietnam, they also were fighting the war on poverty, so they had wars on two fronts. And that eventually led to inflation. It took a while, but inflation started to roar, and gold did very well once it came off the the Bretton Woods regime. Now, that's what we would think is about to unfold here. That's probably the wrong word. I think that is what will unfold here over time. The question is, will the bearish case first play out? And that is, where one driver could be, and it's not happening right now, would be a strong dollar. David Rosenberg, who's the chief economist, market strategist at Gluskin Sheff, was out tweeting last week, I believe, saying that, with lots of budget stimulus and higher Fed rates on the way, he'd be surprised if the U.S. dollar didn't rally. Well, as I said, Mr. Market's been playing a lot of tricks on a lot of people, and since that tweet, the U.S. dollar has not rallied. The U.S. dollar has sank again, and he was out, I see, on Twitter today saying, well, maybe the dollar is reacting to poor economic data in the U.S. So, if the strong dollar isn't going to unfold, then the bears on the gold market have their work cut out for them in terms of getting this wipeout that we keep hearing about from the bearish camp. That there's got, that gold has acted, and gold stocks in particular have acted very poorly in the past year, which is true in the sense that they haven't gone up. They've been kind of in this range. And so the bears will point to that as, well, imminent breakdown, whereas bulls will say, well, no, this is just normal consolidation. So where do we stand? Well, our view is that insiders, which is our primary indicator that we look at, insiders are kind of holding tight here. It seems like they're keeping cash on the sidelines. They were big buyers not so long ago when gold stocks were a little weaker, but it looks like they're keeping cash on the side for either this wipeout breakdown that the bears keep talking about, or on the other hand, I think if gold stocks were to break out a little bit, they would still have some cash to participate in a meaningful rally. We'd have to see how that unfolded. But, I think we really are on a bit of a fork in the road here. Eventually the status quo will change. This consolidation pattern will give way to either a breakout or a breakdown. And over the last couple of trading days, the bulls have been winning, but I don't think there's a clear-cut answer yet. What we'd be looking for on a breakout is a move of the iShares global gold ETF, the XGD. If it can break above its 150-day moving average convincingly, then I think we're off to the races. We're not there yet. And the breakdown, well, you've really got to take out the 2016 lows convincingly and challenge even the 2015 lows. So, we're not at either point yet, but I think this is going to be resolved fairly soon. And overall, though, insiders are bullish on the group. Our indicator is well above 100%. That means there's more stocks with key insider buying than selling. So ultimately, this should play out well for gold stock investors. The question is, do we have to go through this bearish breakdown first? And that tug of war is still going on. So our view is basically, well, let's see, keep some cash on the sidelines, and if it breaks through the 150-day on the upside, well, then there's going to be quite a bit upside, I think. And if there's a break to the downside, I'm not sure it can last very long with the Trumponomics at play, where you've got a president that's admitted he's in favor of inflation, basically. So how that would be gold negative, short of a Fed going into super tightening mode, that's a very difficult scenario to perceive. It's possible, but that's a whole different kind of story. But on balance, the tug of war is alive and well in the market right now.
We'll have more with Ted Dixon right after the break.
Glance Technologies owns and operates Glance Pay, a disruptive mobile payment technology now live in 16 cities in Canada and about to launch in the US. With revenues up 664% in the last quarter, Glance Technologies has the potential to be a worldwide leader in an industry projected to grow to $1.3 trillion in 3 years. Glance Technologies stock symbols are GLNFF in the US and GET in Canada. Find out more at glancepay.com.
Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp Inc., MGI on the TSX Venture Exchange. A 2015 drill program on the LH property intersected high-grade gold, including 16.9 meters of 13.58 grams and 11 meters of 20.66 grams per ton gold. A follow-up drill program is planned to further evaluate previously identified subsurface high-grade gold mineralization. Please visit our website at magnumgoldcorp.com.
Welcome back. We're speaking with Ted Dixon. Ted, we had the market meltdown a week ago, now a recovery. Was that all the correction we're going to see, or was that just the hint of what's to come?
Well, what's interesting year to date, the U.S. market is still ahead of the Canadian market. Now, in this latest downturn, the Canadian Insider Index, which is a mid-cap oriented index focused on Toronto Stock Exchange stocks, has been outperforming U.S. major benchmarks. And I mean, we expect that the Canadian market, if this is a normal kind of late cycle situation, what I mean by that is where you've got inflation picking up globally, the Canadian market should outperform the U.S. market just by its nature of its makeup. We're still waiting for that to happen, but it's showing signs of potentially happening. I wouldn't declare that, yes, the Canadian market, has shown its stuff here. Our athletes are certainly doing their job in the Winter Olympics. Unfortunately, I still can't say the same for our stock market, and even the Canadian Insider Index, which is outperforming the TSX already by over 2.5 percentage points so far year to date. I mean, it's just been on a tear against the TSX Composite Index. It still has a little bit of ground to make up to outperform the U.S. Now, the U.S. market, our insiders in the U.S., I tell you, they've bounced back a little bit here. I mean, they've been kind of waiting for this correction, and what we saw over the last week is a little bit of insider buying pickup in the U.S. Nothing to say, wow, this was a buying move of this, of the year, or of a generational buying move. It was not. But the U.S. market, by our indicators, could stabilize a bit here. How long is the question? And insiders in Canada, though, remain on balance upbeat. That being said, even the Canadian market, we wouldn't expect to see on a broad basis above average returns from here. We're looking at average returns for investors who want to really get above average returns. They're really going to have to knuckle down and do some pretty good stock picking.
What stocks do you think will be the ones to watch to give us a good indicator?
Well, we talked about the gold. What's in store there. I mean, in terms of the Canadian Insider Index, and what we've seen in how that is rebalanced twice a year. We still have a lot of focus on the basic materials group, including forestry stocks. Now, West Fraser Timber, for example, it's a member of the Canadian Insider Index. It just reported its Q4 results today, and they blew by all the estimates, all the analyst estimates, and they've really been cashing in on Trumponomics, where Donald Trump has thrown tariff barriers up, as we know, on Canadian lumber, but lumber is soaring, and the forestry companies, Canadian forestry companies, are benefiting from that. They've been able to pass along those prices to American consumers. And you had Donald Trump being quoted this week talking to congressmen saying, "Well, you may what's wrong with tariffs? You may get a higher price, but you get more jobs." I mean, that's where the guy's mind is at. So, we hear a lot about the deflationary arguments in the market, how there's an impending collapse coming in the U.S. economy. I mean, I see this all the time on the internet, and bond yields are going to negative and whatever. Maybe that will happen. As I said, I've been wrong many times already in 2018. Maybe we'll get this great deflation, but you've got a president who's in favor of higher prices, and you've got a Fed that's dragging its feet so far, anyways, on inflation. And what we're seeing, though, is still insiders pretty upbeat in the forest products area, for example, but basic materials in general. If we get this kind of continued inflationary situation, which we expect on balance, we're not in the deflationist camp. There's plenty on the internet for those who want to go, look for the doomsday scenario out there. If we are going to get run into any turbulence, it's likely going to be on the inflationary side.
We'll have more with Ted Dixon right after this.
Hi, I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO, on the TSX Venture Exchange. Rainy Mountain's Brunswick property is located in the Rideout Shear Zone in Ontario, with grab samples running as high as 32 grams per ton gold. A follow-up drill program to test numerous targets located by recent groundwork is planned for early 2018. Please visit our website at rmroyalty.com.
Keep informed. Receive our weekly recap of thought-provoking articles, podcasts, and radio delivered to your inbox for free. Sign up for the HowStreet.com weekly recap on our homepage, HowStreet.com.
Welcome back. We're speaking with Ted Dixon. Ted, we have both a BC budget and a federal budget coming up. First, the BC budget. What do you think they're going to do, and what would you like to see?
Well, they've said they're going to tackle the housing situation, and so let's see what they have up their sleeve when it comes to housing. They devoted a lot of time to it in the throne speech, so that signals that they're serious about it. They've taken their time. There have been a lot of people criticizing them for not having done more, but I think once they got into office, the NDP realized, wow, this is a huge problem, and they've taken their time, probably rightly so, to, I would hope, craft a solution. So what I would like to see, and I think we will see, is they're going to call it a speculator's tax or a speculator's levy. They won't call it a tax. Well, they may call it a tax. They're socialists, so they don't have problems using the word tax. But they're going to put a surcharge, I think. This is my prediction, and you'll have me back on, and I'll be probably wrong, but probably going to do some kind of a surcharge on people who aren't paying taxes here, but who own properties. And I call it the Davidoff reform, where Tom Davidoff, a professor at UBC, has basically suggested you increase the property taxes for people who aren't paying any other taxes. I mean, that's his proposal in a short elevator ride. And then you give the money back into the local economy that you collect either through tax cuts, which would be my preference, or you can use it to spend on social housing or other pet projects, which is what the NDP would do. I've been trying to convince the BC Liberals, in the last leadership round, you guys got to get on board with this idea. You got to fix the speculation in the market. You got to bring in some kind of surcharge, but give the money back through tax cuts to people who work here. But that went over like a lead balloon. I don't know where the BC Liberals are going to stand on this. I mean, they seem to be, still parroting the failed mantra of more supply, which is a developer's dream. But the NDP are going to tackle this. So I wish them well in it, because someone has to tackle it. The speculation's got completely out of control, and but boy, dealing with this file is very difficult. You don't want to, certainly as a politician, you're not going to want to be seen as bursting the bubble. But on the other hand, you don't want to be seen as ignoring the problem, because we saw what happened to the BC Liberals is they did bring in the foreign buyers tax, but then they backtracked on it, and then they brought in other bad policies after that. So it's a tricky file. So I think that's going to get all the attention. Yes, there'll be some other there'll be other items on childcare and the like, but wait for it. Housing is the big one.
Home buying consultant Ross Kay suggests the way to deal with some of this foreign speculation is you don't tax them when they buy it, but you tax them when they hold it. In other words, tax foreign owners.
Well, or tax owners, speculators, not just foreign. There's also domestic, and I think, yes, it's pretty clear that foreign speculation has been a big driver in the local market, but you can also have domestic speculation. If you drive out the foreign speculators without putting in measures to also stop domestic, surprise, surprise, you'd see a bunch of domestic speculators come in and take over. So you need a blind approach in that any speculation in the market, has to be discouraged. And how do you do that? You do that by, Ross is right in this, if I understand the comments right, you have to increase the holding costs of speculators, right? So, that's where if you raise margin requirements on a futures contract or stocks, you discourage speculators because it costs more money to borrow to hold your position and on the hope it's going to go up. Well, I can tell you, Jim, and many of your listeners will not believe this, okay? But Vancouver has some of the lowest property taxes in North America. It is true. It is true. Okay, and yes, there's apples and oranges about this and that, but as a speculator, when you're looking for a market to speculate in, you want to go where the holding costs are the lowest, and Vancouver's been very low. So I think the NDP are going to tackle it by increasing the holding costs, but you make sure that doesn't hit people who live and work here and are members of the who contribute to the economy or who have contributed. So it's a very tricky issue for them, and I wish them well in handling it. I think this should be a bipartisan issue. I really hope the BC Liberals play a constructive role in this, because if they don't, they're just going to look silly. And so we will see how they respond to what the BC NDP do. But it will be very interesting, and I think yes, you don't tax them on the way in. You tax them. Well, you can try and tax them on the way in, but you'll have lawyers and accountants getting around that. But you tax them as they're holding it. You want to speculate what's going to cost you, and we're going to take, and you're going to be paying British Columbians who work in the economy here. You want to hold their property. You want to take a home or a condo off the market to hold and speculate. It's going to cost you a lot of money, and we're going to give that money back to British Columbians.
The Canadian budget's also coming up. What do you see there?
Well, this will be interesting. I mean, maybe we'll get some more clarity on small business taxes. Maybe we'll get a bit more clarity on the infrastructure plan. I don't expect a lot from Bill Morneau in this budget. I think next budget will be the big one, closer to the election. So I think this will be a stay the course budget.
You mentioned small business. That did give the Conservatives a nice opening on the Liberals, perhaps the first. Do you think that Morneau has learned his lesson that when you mess with Canadian small business, you're messing with the heart of job creation?
Well, we'll have to see. I think that the Conservatives didn't capitalize on that opportunity politically as much as they could have, because they lost a by-election seat here, not so long, Diane Watts' old seat, that was a Conservative seat. So I think the jury is out on that. I hope the Liberals didn't take that by-election win as we can stomach that, we can handle all this negative stuff. So, I think that both parties have to be concerned about how the small business issue played out. The Liberals should be concerned because it took a chunk out of their popular vote, but Conservatives should be concerned that they weren't able to capitalize on it more. I'm talking politically, so I think both parties have to sharpen their policy positions, but that may or may not happen as we get closer to the election. We'll have to see.
Ted, thank you so much for chatting with us.
Well, thanks for having me back.
My guest has been Ted Dixon, CEO and co-founder of IncResearch.ca, his website, CanadianInsider.com. You're listening to HowStreet.com radio. Find us on Twitter at HowStreet. Our popular YouTube channel is Talk Digital Network. Questions for the show or our guests can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.